In the studio, Liz McDonald, the Fox Business Stocks editor, and from Las Vegas, Francis Newton, CEO of Francis's Insights. Good to have you with us as well. Francis, let's begin with you. With all of the activity, $104 in crude oil, what happened to the market? What happened to equities today?
Well, equities, there is a lot of indecision because we have the speculative news of the Middle East and it is a crisis. However, most traders, most technical traders such as myself, we know that news is speculative and at the end of the day we have fair value. It's very dangerous to go long as the market it's up quite substantially, and at the same time people don't want to go into crisis short mode because it may have another leg higher, and I think largely it will depend on the Dow at 11,875 if we can hold that level. S&P 1250 is absolutely crucial. NASDAQ 2556, very crucial levels, and so we're just kind of having an indecisive moment, the calm after the storm.
With all of those charts and all of those numbers, you've reached indecision?
Yes, indecision. No, it's kind of funny. I was actually on with Cavuto in November, and I said that I thought that the market would top out around 12,500 the day after the election, and I got not quite within 100 points. What I'm waiting
Francis,
to see is...
I've got to turn to you now and say, you know, what have you done for us here lately? Come on, where are we headed? Before I do that, I'm going to turn to Liz. Liz, the market's here, shifting a bit. 3 days of recovery, right, canceling out those losses during all of that was happening both in the Middle East and in Japan. What is your sense right now of what's happening?
You know, it's interesting. It's not so much, people thought we had a picture-perfect tape going through the fall and into the winter, right? That we were in some kind of immaculate recovery. It wasn't bad. It felt sweet, right? But, you know, the price action on the tape was eerily similar, and this is what the talk on Wall Street and in places like Barron's, eerily similar to what we saw last year with the BP oil crisis, the Euro debt crisis, and then that awful flash crash of May 6th, where the market toppled dramatically because of those trades that are made within the split second faster than you can blink your eye. And so, but we still have the Euro debt crisis. The SEC is still coming up with flash crash reforms. They haven't offered them yet. And now we have the Mideast and we have Japan. So, you know, I think what traders are very worried about is the Middle East. They feel like Japan is going to correct itself, and yes, it will be some overhang from that. But again, it's the uncertainty from the Middle East.
The folks that you speak with every day on Wall Street, surely they're stunned that we watch the volatility index hold firm today with a nuclear crisis in Japan, Japan's worst earthquake in its history, and resultant tsunami, with all the United States attacking a sovereign nation, right, the third Muslim nation, with what is happening in Bahrain and Yemen, not to mention Libya. I mean, this, if you'd have told most folks that this would be happening and said we're going to see a 19-point move, you know,
right.
they'd say,
you know,
crazy.
And Lou, I got to tell you something. That's such an important question because there must be a broad zoom story. There has to be a backstory here, and the narrative I'm hearing, that's a compelling one, and Wall Street likes this storyline. It's this: 3 billion new middle-class consumers coming online in the developing and emerging markets in China and Asia, and those people will have more purchasing power as, for example, countries like China are raising wages. So, you know, will that trend continue? That's the backstory that Wall Street is looking at right now.
And I'm going to move to the front story here with Francis Newton. Francis, do me a favor. Francis Newton,
yes,
gets the opportunity to tell us exactly what's going to happen with these averages, the S&P and the Dow in particular, over the course of the next few months.
I say it's going to have some, I think the markets are going to struggle here, and I think that it all depends on liquidity. What we're watching, at the beginning of the recession when Bush put the first stimulus package through, that stimulus package lasted about 2.5 years before it worked through the system and wore out. Now we have quantitative easing that came in, number 2, that came in November. That they're already talking about doing more stimulus and quantitative easing 3. So what it's telling us that the debt rate is actually becoming more rapid and wearing more rapidly, which is natural in this algorithm. I'm going to say the markets are going to have a tremendous amount of trouble, and we are going to see a liquidity squeeze, which I think is fundamentally underneath all of the bad news. And I do think that we're looking to a sell-off pretty soon, whether they take it up one more time and drop her or go down from here. And I think 12,500 on the Dow is important.
All right, and I will join you in that. Thanks so much.
Okay.
I appreciate it. Francis Newton, we thank you. Liz McDonald, thank you both.
Sure.
You're great. Up next, Fox.